It is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks, record rally, losing steam as earnings forecast from Broadcom and CrowdStrike fail to impress. J.P. Morgan's Jamie Dimon kicking off an unprecedented nationwide marketing push for the SpaceX IPO, even though he's not on the lead left. And Iran says there has been no progress in peace deal talks with the U.S. Let's get a check on the markets around the world. We go to Winnie Su in Singapore for the latest from Asia. Winnie?
Good morning, Matt. We are seeing Asian stocks pulling back today with these concerns around the AI demand slowdown, especially following disappointment from the results from Broadcom. And that's also raising some uncertainty in terms of the demand visibility for the AI supply chain. And hence, you can see that the tech-heavy gauges in Asia, including South Korea's Kospi Index and Japan's Nikkei 225, both falling more than 1%. Now, you flip the board, we take a quick look at cross-asset picture because we have the Japanese yen here strengthening just a bit after we've heard that the Bank of Japan's officials are considering to discuss a quarter percentage point rate hike in June, following another potential rate hike later this year. Now, otherwise, we are looking at some weakness across the Asia FX, with the Korean won hitting its weakest level since 2009 against the dollar, despite officials sounding some intervention risks as well. And also we have the Indonesian rupiah hitting another record low. All
right, Winnie, thanks very much. Let's go to London now for a look at what's going on in Europe. For that, we go to Justina Lee. Justina?
Good morning, Matt. Now, there might be no progress in the U.S.-Iran talks, but we are seeing kind of a little bit of a move down for oil, and that's kind of being reflected across markets today. I mean, the Stoxx Euro 600 down a little bit, but it was up a little bit earlier, but generally trading in the range. Same with short and bond yields. Now, I can bring to you two inflation reports from outside the Eurozone ahead of the ECB meeting next week. Now, first off, we kind of got the CPI from Sweden, which is showing kind of less of a gain than a lot of economists expected, and that's being reflected today in the Swedish krona kind of strengthening a bit kind of against the euro, and with economists kind of also not really expecting the need of a move from the central bank over in Sweden. Now, another place where you might not really need a hike is also Switzerland. So we flip the board here. We can see that all year long we've seen some strength from the Swiss franc, and that's probably helping counteract some of those inflation pressures coming from the oil move. And that's also why we're not seeing kind of a big move up in inflation also kind of in Switzerland. And so maybe over there we might not get a rate hike, but of course the focus will also be on what the ECB does next week, Matt.
All right, Justina, thanks very much for that. Let's take a look at what's going on in U.S. futures. We're looking at a 0.5% drop here after we fell in the cash trade yesterday. Nasdaq futures down more than 1% on the disappointment from, let's be clear, the beats that came out of Broadcom, the increase that came from CrowdStrike. It just wasn't enough to meet expectations. The small caps gaining a little bit. In terms of what's going on with treasuries, let's look at U.S. yields right now. You can see we're looking at a drop on the 2-year of 2 basis points to 4.0617. The 10-year coming down 1 to 4.04828, and the long bond still holding under 5% at 4.9867. In terms of what's going on with oil, as we get really conflicting messages out of the White House and the Middle East, you see NYMEX crude coming down $1.39, but still at 94.62. Brent crude off 151 to 96.30. And by the way, Bitcoin is still well under 70,000 at 63,368. Just continues to lose ground, and that may be a risk-off signal as well. For some of the single stock stories that we're following, let's get out to Chloe Melee in London. Chloe?
Good morning, Matt. Let's start with two stories of big tech companies failing to meet sky-high expectations. We've got shares plunging for both Broadcom and CrowdStrike this morning after their respective outlook failed to meet expectations, disappointed investors, and essentially put a stop to a blistering rally for both of those companies. The Broadcom story in particular is actually dragging down some of the other AI-related names in Europe and Asia as well. So that's really a key story to keep an eye on. Moving on to PVH, the owner of Calvin Klein and Tommy Romney Hilfiger, which is seeing a lot of weakness this morning, down more than 21% after guidance missed expectations. This seems to signal that the company is really being hit by this weaker consumer spending, especially in Europe, where that was really the weakest region. And finally, let's end with Universal Music Group, which is also in the red this morning after Bill Ackman sold his stake in the company. This comes just a few days after Universal rejected a bid from Ackman's Pershing Square, saying that the deal was not in the interest of shareholders or the artists that it represents. And so we are seeing Ackman now moving on from the company and Universal down on the back of that.
All right, Chloe, thanks very much. Chloe Melee out in London with the single stock stories for you. Coming up this hour, Sharon Bell of Goldman Sachs and Rhonda Vonshay Sharpe, president and founder of the Women's Institute for Science, Equity, and Race. But first, the U.S. says that Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. Israel and Lebanon reaffirmed that they have no hostile intent toward one another and committed to continuing direct negotiations to build confidence and work toward a comprehensive agreement. I'm reading a direct quote there. I assume that's from President Trump, but we'll find out in just 1 second. Iran has said, though, that there had been no recent progress in talks with the U.S., despite Lebanon being a major sticking point. Joining us now is Bloomberg's Abir Abu Omar. So, Abir, what do we know about this? President Trump insists that there will be a ceasefire, and yet the fighting continues in southern Lebanon.
The fighting continues in southern Lebanon, Matt, and also we heard from the Iranian side through Foreign Minister Abbas Araghchi saying that there's no real tangible progress in the broader talks towards an interim agreement. But perhaps something positive that happened yesterday was that Israel and Lebanon met in Washington to discuss ending the hostilities, and Israel said that it will end the hostilities if Hezbollah, which is backed by Iran, stops its attacks against northern Israel. Now, what we saw over the past 40 minutes or so is that Israel has been continuing its attacks against the southern part of Lebanon, close to the Zahrani river that is close to the borders of between Lebanon and Israel, and close to Nabatea, which is where Israel has its deepest incursion in about 25 years. So we saw those attacks continuing. We've had attacks against Gulf countries over in this week. We spoke yesterday about the attack against Kuwait and the airport there, the main airport there, that led it to suspend flights because of some significant infrastructure damage. One person was killed, several others were injured, Kuwait reported. Iran said that the leaders there have to take responsibility for those attacks. So what we know is that the talks towards a broader agreement where Lebanon was a sticking point are still lagging. President Trump did come out overnight and say that a deal in theory is imminent. He said that talks could continue this weekend, but then he went ahead and said, but they may not. And so we go back to this back and forth between Iran and the United States that has been going on for about 2 months now. President Trump did say, however, that once an interim deal is approved or reached, that MOU that we've been talking about that would lead to the opening of the Strait of Hormuz and then an extension of the ceasefire for 60 days, he said that that MOU, as soon as it is signed, the Strait of Hormuz would open imminently. And look, both sides are incentivized at this point to reopen the Strait of Hormuz. Iran for the economic damages that it's been suffering. The U.S., I mean, you would know better about this, but the House and the Senate yesterday approved a resolution that would have President Trump rethink his actions in Iran. Now, obviously, he could veto this and not act upon it, but it just goes to show how much pressure he's facing domestically to end the war in Iran by both Democrats and some Republicans.
All right, Abir, thanks very much. Abir Abu Omar keeping us updated on the latest out of Dubai. That statement that I read, by the way, was a joint statement apparently between the U.S., Lebanon, and Israel. Of course, the missing link there is Hezbollah. Meanwhile, over in Washington, the House voted to stop the Iran war, with 4 Republicans joining all the Democrats present to pass the resolution, the most GOP support so far, or rather opposition. Joining us from Washington is Bloomberg government's Mika Solner. So, Mika, what does this actually accomplish, this resolution? Because it still has to go to the Senate, and of course, President Trump would have to sign it, right?
Yeah, so this is a significant bipartisan rebuke against President Trump when it comes to the Iran war and his efforts abroad there that seems to continue to have no end in sight right now, and is just continuing to drive up costs. And the four Republicans are very interesting because we saw Congressman Brian Fitzpatrick, who Trump has continuously criticized online, Thomas Massie, no surprise there. But we also saw members like Tom Barrett, a vulnerable Republican from Michigan, who's running for re-election, as well as Warren Davidson, who's increasingly taken some votes to break against the administration as well. So these four votes were interesting, but I think it shows a growing frustration on Capitol Hill with the way that the president has approached the military operation in Iran. So
what result will we see from this? I mean, I know the Senate also had some legislation written that it still needs to take action on. How does this hamper or help the president?
Yeah, I think it's going to be interesting to see what exactly the Senate does. We know that there are also Republicans on the Senate side who are growing increasingly frustrated with the war as well, and who have been not afraid to be critical of the way that Trump has handled, have raised public questions about what exactly the administration's objectives are in Iran. So if the Senate does pass the resolution, it will be a defining moment, I think, that if this goes to President Trump's desk for a signature. But we should expect to hear from the president later today. And, you know, it's very possible that he may comment on this, but we have yet to really directly hear much from the White House on, you know, the latest.
Got it. Mika, thanks so much for joining us. Bloomberg government's Mika Solner talking about that War Powers Resolution Act, and we'll watch for comment from the president. That's half of the disappointment in the market today. The other half, of course, the tech story. Stock futures lower after the S&P 500 snapped a 9-day winning streak as Broadcom slips on, I guess, disappointing guidance on its AI chip revenue. For more, Matt Bloxham at Bloomberg Intelligence joins us. And Matt, I'm a little bit I guess, astounded, because Broadcom is essentially saying we're looking at 200% revenue growth for our AI chip business, and that's not enough for Wall Street.
Yeah, exactly. It's quite staggering, isn't it? And I think it just shows you where expectations have got, specifically for Broadcom, but also, you know, for the wider AI market. But yeah, you know, as you say, in isolation, 200% year-on-year growth, you know, after a quarter print, which was 143% growth. So it's an accelerating rate of growth. Yeah, I think in isolation is actually a good demonstration that they are executing pretty well on their transition to a much more AI-focused business. And it's just like, you know, a kind of realignment of where market expectations have got to. Yeah, they're talking about $16 billion of AI revenue in the next quarter. The market's at just over $17 billion. It's still entirely possible that they could hit that $17 billion. So, you know, I think we're just we're in a phase where there's a lot of volatility around that AI trade. You know, some prints get accepted well, some not so well. But, you know, overall the momentum is pretty positive right now.
Yeah, and I guess the 5 trading days previous, they had added $270 billion in market caps. The shares in 5 sessions had added an IBM or had added a Salesforce. It's pretty amazing, these numbers. Also, CrowdStrike, it's getting hit in the pre-market trading after it raised its revenue forecast.
Yeah, and again, I think this is just an expectations management situation. I'd say they were kind of slightly better results for the quarter. I think the guidance raise just essentially has brought the company up to where the market already was. So I think, as ever, the market's looking for a beat and raise. We had the beat, but not the raise, or at least not the raise above where the market already was. So I think, again, just a kind of a recalibration of market expectations there.
All right, Matt, thanks so much for joining us. Matt Bloxham of Bloomberg Intelligence talking to us about the other half of disappointment you're looking at in equities today. Let's get to some of the top stories trending on the terminal this morning. Partners Group says it's ready to gate other evergreen funds. According to the Swiss firm, 3 other mature evergreen funds with a total fund size of $9.7 billion are also estimated to see redemptions between 3.5% and 5% in the second quarter. The announcement comes a day after the firm capped withdrawals from one of its PE funds on Wednesday. Of course, we talked to the CEO in this program yesterday. Bloomberg sources say Bank of Japan officials are set to consider a quarter percentage point rate hike this month when they meet on June 16th. This would raise the policy rate to 1% flat. Officials see more hikes beyond that, citing persistent upside risks to inflation and still low real interest rates, though they have yet to act so far, as we discussed also yesterday on this program. And some members of the billionaire Glazer family are debating whether to sell their stake in Manchester United, the soccer team, after more than 20 years of ownership. Sources tell Bloomberg that some family members raised the idea and are now trying to convince others to join them. Any potential sale could attract interest from suitors, which include Middle Eastern parties and wealthy individuals in the U.S., as well as apparently Rupert Murdoch. Coming up, Jamie Dimon gearing up to pitch SpaceX, the SpaceX IPO, to JP Morgan's ultra-rich clients, even though they're not on the lead left. More on that next. This is Bloomberg.
We have liftoff. Go Super Heavy. Go Starship. Thanks for all the historic flights, Bad One.
This is Bloomberg Brief. I'm Matt Miller in New York. JP Morgan CEO Jamie Dimon getting ready to host a live interactive discussion today to pitch SpaceX's upcoming IPO with high net worth clients, with thousands of them. Joining us now is Bloomberg's Benedict Campbell. And Benny, this is, to me, fascinating on so many levels. He's probably the most respected bank CEO in the world. He's going to talk directly to thousands of his own private wealth clients to sell these shares, even though JP Morgan's not on the lead left, right? Goldman Sachs and Morgan Stanley are running this IPO.
Yeah, you're right. But this gives you a sense of just how everyone is scrambling to get a piece of this pie, and it's a huge pie. We got the price yesterday, $135. The listing, $75 billion. Retail investors obviously will be allocated a fair size of this. We're hearing about 30%, which is above what would normally be allocated to retail investors. So this is an important part of the story, and Jamie Dimon obviously trying to sort of play an important role in this. As you said, they're not the lead bank on this. That's a glory that went to Morgan Stanley and to Goldman Sachs, importantly. But yet again, you know, this is such a big story that everyone wants to be part of this, and clearly Jamie Dimon wants to be part of that as well. I
think it's worth repeating how unique this is in terms of an IPO, in terms of book running. I mean, you and I have worked together for 25 years now, Benny, and I've never seen a company just come out with a price. There's always a range, and that hasn't happened here.
Yeah, this is one of the more unusual elements in a very unusual listing to begin with. I mean, a lot of things, you know, starting with the listing that came out last week and some of those really mind-boggling numbers that we saw. So this sort of trend continues, and it shows us that Musk is doing things his way. You know, he's doing things the way he prefers. He's obviously got very tight control of the company. He'll retain control over the shares. He can really nominate the board at will. And this is one more step the way he's going about it. There might yet be some movement on the shares, but unlikely. So we're settling on this 135 number, and that gives us the valuation just shy of 1.8 trillion. And importantly, if the stock bounces on the first day, and at this point it feels like that's going to happen, we will see the first trillionaire in Elon Musk because of his stock holdings and because of just the high demand for this offering.
All right, Benny, thanks very much. Bloomberg's Benedict Campbell covers aerospace for us out of Berlin. You can see the Brandenburg Gate there behind him. And we're expecting, by the way, these shares to start trading at the end of next week. Coming up, Meta may have taken on more AI investment than it can realistically handle. By the way, SpaceX's valuation will already put it at a higher market cap than Meta. More on that and a look at what else is making headlines on your front page next. This is Bloomberg.
I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital.
That was Goldman Sachs CEO David Solomon speaking on Bloomberg's Odd Lots podcast about the IPO boom. Be sure to check out that full podcast interview, and all of their episodes is one of my absolute favorite podcasts. It's time now for your front page news. First up, the New York Times leading with the House reining in the White House and President Trump on the Iran war, a measure to direct an end to the U.S. engagement in Iran passed with 4 Republicans in support. The Senate now needs to vote on that measure. Next up on the Washington Post, President Trump's plans to nominate acting Attorney General Todd Blanche to a full term. The Post said Blanche's Senate confirmation process could face tough headwinds. Some Republican senators have expressed hesitation about Blanche, specifically questioning comments he made that appeared to excuse violence committed against the police on January 6th in the attack on the Capitol. This is Bloomberg. It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. Stocks, record rally losing steam as earnings forecasts from Broadcom and CrowdStrike fail to impress. JP Morgan's Jamie Dimon kicking off an unprecedented nationwide marketing push for SpaceX shares, and Iran says there has been no progress in peace deal talks with the U.S. a day after the White House said Israel and Lebanon will stop fighting. Now, in terms of what we're looking at on futures, S&P futures down 0.4%, and this after the S&P yesterday closed down 0.75% in the cash trade. You can see that Nasdaq futures are down more than 1%, and Russell futures are actually slightly higher right now. We do see yields coming down across the curve. The 2-year yield down 2 basis points to 4.06. The 10-year at 4.48 off 1 basis point, and the long bond down under 5, still at 4.9877. Take a look at what's going on with oil, because although it is down, it's still holding around the same levels we saw yesterday, with NYMEX crude trading at 94.91, off 1% and change. Brent crude down 1.5% to 96.36 a barrel, and Bitcoin now trading at $62,674 a piece. Let's get a look at some of the individual stock stories we're following for you this morning. For that, we go to London and Chloe Mealy. Good morning, Chloe.
Good morning, Matt. We've got 2 big tech companies, Broadcom and CrowdStrike, disappointing investors, and we have their respective outlooks coming in below what were sky-high expectations. And so we're seeing that really drag down those shares, but also drag down the rest of that tech hardware sector in US, Europe, and Asia. And so this is really denting sentiment around AI. And so it will be a big story to keep following throughout the day. Moving on to PVH, which is a retailer that owns both Calvin Klein and Tommy Hilfiger, and we are seeing a huge drop in the shares this morning, down almost 23% in pre-market trading after guidance disappointed estimates there as well. And so it seems that the company is dealing with that pressure from weaker consumer spending because of the Iran war. And in particular, Europe was a region that was struggling for that company. And so we're down massively there this morning. And finally, let's end by going over to Europe, where Universal Music Group is also seeing some weakness after Bill Ackman sold his stake in the company, and that comes just a few days after Universal rejected a takeover offer from Bill Ackman's Pershing Square, saying that it undervalued the company. And so we are down about 7% in Amsterdam this morning for the record label.
Got it. Chloe, thanks very much. Chloe Mealy with some of your stock mover stories out of London. We are looking, by the way, at some economic data this morning. We're getting challenger job cuts for the month of May across the ticker, and they've risen 3.4 4%. So more job cuts in the month of May than the same month last year. The total number of job cuts as recorded by Challenger is 97,006. So we will watch. Right now I'm just looking at U.S. 2-year treasuries to see not a lot of reaction in the treasury market. And it's something that we're going to take into account in a week of labor data. Now, let's take a closer look at Broadcom. As you just heard Chloe say, its chip sales growth forecast of 180% failed to impress investors, I guess, even loftier expectations. They want to sell, I think, $56 billion of AI chips in the full year. That's incredible growth. But the shares have already risen so much so fast. In fact, over the past 5 years, Broadcom shares with reinvested dividends are up over 1,000%. So they're down 12.8% in the pre-market. Matt Bloxham of Bloomberg Intelligence joins us now to talk about, this incredible run-up, Matt, and expectations obviously match that. So I guess 180% growth isn't enough to meet those expectations for now.
Yeah, that's right. I think the market was looking for even stronger growth. So if you look at the forward quarter, they guided to about $16 billion of AI-related revenue. The market was looking for over 17. Now, the momentum is improving quarter on quarter. So I think there's still a chance they could kind of get close to that 17 billion. But it just kind of shows you, where expectations have got to on this company. I think if you look in isolation, the company is doing a great job at this transition towards an AI-oriented business. They've got big and expanding deals with all of the major AI players. So I think the outlook's pretty rosy. It's just the shares have ramped up a lot, and the market expectations were just perhaps a little bit too frothy.
CrowdStrike shares also had done really well coming into earnings. I mean, just a major spike. Year to date, I'm looking at a gain for CrowdStrike of already 60%. So when it raises its forecast after a beat only by, let's say, 30, 40, 50 million dollars, it's just not enough to meet expectations, is it?
Yeah, that's right. And I think it's a similar story to Broadcom that the market had already penciled in fairly optimistic expectations for growth for this year and beyond. And the guidance raise essentially brings the market up to a level where analysts were already sitting. So no encouragement to kind of raise consensus estimates ahead. So, people are always looking for the beat and raise. We had the beat on the quarter, but we didn't have a big enough raise to kind of really push the stock higher.
All right, Matt, thanks very much for joining us. Matt Bloxham covers the tech stories for us on the Bloomberg Intelligence side. You can follow his research by typing BIGO on your terminal. Joining us now is Sharon Bell, Senior European Equity Strategist for Goldman Sachs. And Sharon, let me get first your reaction to this market. I mean, when Broadcom comes out and says we're going to grow our AI chip sales 180%, and that's not enough for investors, what does that tell you?
I think it does tell you that the market's been very concentrated recently. It's been very much driven by the thematic of AI and all the expectations related to it. You can see the growth is coming through. I mean, the companies that are reported in the first quarter, that are reporting now, are still making numbers, if not beating numbers. But there is an awful lot of expectation embedded in there as well. And you see that in the valuations. You see that in the recent share price performance. We have seen,
AI stocks, especially in the U.S., where obviously they're most concentrated, I guess outside of South Korea, drive the S&P 500 to a gain of already more than 10% this year. We don't see those kind of gains in European stocks. And I guess it's mainly because, Sharon, you just don't have the same kind of tech presence in European indexes, right?
No, we don't. We don't have the same concentration across Europe. I mean, there are tech companies, and they have, in general, been doing very well. But you've also got other companies which are, in some senses, related to the tech story. You've got the industrials. You're going to need a lot of asset-heavy capital investment, driven by data centers in particular, but not just data centers, energy demand, defense, things which governments are spending on too. So there are themes in Europe that are doing well. It's not just an AI-driven story in Europe. But yeah, you're right. I mean, the US market's up 10%, Europe's up about 5%, and I do think that's the difference in sector exposures.
Do you expect that to continue? Because last year we saw European indexes for the first time in recent memory outperform the U.S., really trouncing U.S. performance. And it seems to be an outlier if you look at the performance of those two markets versus each other over the last, say, 10 or 15 years.
Completely. I mean, the US had, since the financial crisis, really, almost every year, very unusual years for Europe to outperform. Almost every year, the US market outperformed Europe. And not only that, the dollar was generally rising during that time. So investing in the S&P, you may have gained from a stronger dollar, and you gain from stronger equity prices relative to Europe. I think it's been more mixed recently. In the last year and a half, you've seen periods of European outperformance, periods of US outperformance. I do think it depends a little bit on the tech trade. Obviously, Europe has a much smaller weight in tech than the US. But it depends on other things as well. Europe is a less expensive market than the US. It's a market which a lot of investors globally, including US investors, are looking to diversify into. They're buying global ex-US funds, for example. This is a route to diversifying away from extremely expensive and concentrated exposure in the US. Now, that exposure has done well, and the earnings growth, as we just discussed, have been great. But you can also pick up some good value plus earnings growth in Europe as well.
What does the AI trade or really the infrastructure build out, Sharon, look like in Europe? Because on this program a couple days ago, we were talking about major investment by SoftBank and Samsung into France. They have a wealth of power due to their reliance on nuclear. Meanwhile, Germany has been caught out by relying on Russian gas for so many decades, and they really are looking at a shortage in terms of their power needs.
I agree. Look, generally speaking, Europe does not have energy independence. Different countries differ, but overall, Europe does not have energy independence. That being said, Europe has been quite resilient over these last couple of months with the Straits of Hormuz being closed. Europe gets energy from North Africa, it gets energy from America, it's ramped up renewable energy supply over time and will continue to do so. As you say, France has got nuclear. So there's a bit of a diversified portfolio of energy for sure in Europe, but doesn't have the energy independence that, say, the US market has. And that may be a factor in curtailing the big growth in data centers. But what I actually think is probably going to be more of a factor is regulation, planning permission, just getting through the bureaucracy that you often see. So I do think Europe will be behind when it comes to the rollout of those things. But European companies, the listed companies on the stock market, tend to be quite global. So they've got access to growth in these areas across the world.
So what is an investor to do, Sharon? I mean, sitting in the middle, say a pound investor, where should she put her money?
I think it's a good idea to diversify. I mean, you definitely want some money in the US, you want some money in tech, you want some money in all those growth areas, although in lots of cases they're now quite heavily priced as well. So I would recommend diversifying. This is something we've been arguing for the last 18 months or so. You want to have exposure to Asia, to the US, to Europe. I think they've all got different characteristics. You've got tech exposure, obviously, very concentrated in certain companies in Asia and in the US. In Europe, you've got a lot of exposure to what we call halo assets, which is heavy assets, low obsolescence. These are types of companies like energy, utilities, telecoms, industrials, which we're going to need to build out all the infrastructure we need in the next few years.
So how much does the war in the Middle East, the U.S. war in Iran, matter? I mean, I guess you watch, like us, the headlines day by day, but does it change your investment thesis?
I'm actually being surprised at how resilient Europe has been so far, but it's certainly a negative, and it's particularly negative for the consumer discretionary areas in the market. And Europe is very vulnerable. Europe doesn't have energy independence. We are reliant on getting energy from the rest of the world. That has pushed up prices. That is hitting the consumer in Europe. Now, from a stock market perspective, consumer discretionary stocks are small versus, say, the energy sector, which is a big sector. So we've still seen earnings rise for Europe, and that's largely been driven by energy and tech and a little bit of financials with higher interest rates helping there. But there is a group of companies, consumer discretionary names, which are going to be much more vulnerable. So yes, it's certainly a negative. And I think, obviously, Europe will be one of the biggest beneficiaries if and when we see the Straits of Hormuz open again.
Sharon, great to talk to you this morning. Thanks so much for joining us. Sharon Bell there of Goldman Sachs out of London. Let's get to some of the other top stories trending on the terminal for you this morning. Lebanese President Joseph Aoun says the ceasefire with Israel could begin within 24 hours after the parties involved got approval. U.S. mediators will decide on the time and mechanism of the truce. Aoun's remarks come just after Hezbollah said it fired missiles at Israeli troops in Lebanon. Partners Group says it's ready to gate other evergreen funds. According to the Swiss firm, 3 other mature evergreen funds with a total fund size of $9.7 billion are estimated to see redemptions between 3.5% and 5% in the second quarter. The announcement comes a day after the firm capped withdrawals from one of its PE funds on Wednesday. And D.E. Shaw is extending the time it will take investors to fully exit 2 of its biggest hedge funds. The firm joins Millennium and Citadel among firms trying to keep client cash for longer. According to Bloomberg sources, D.E. Shaw will also shut down 2 smaller multi-strat funds managing less than $10 billion. Coming up, the tech sector in the U.S. announcing the most job cuts in nearly 2 years, according to Challenger data. We'll discuss more on the labor market with Rhonda Vonshay Sharpe, president of the Women's Institute for Science, Equity, and Race. Next, this is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Challenger job cuts data say May job cuts were up 16% versus April. Tech leading the U.S. in layoffs with over 38,000 cuts. Companies citing AI as the leading reason. Rhonda Vonshay Sharpe is the president and founder of the Women's Institute for Science, Equity, and Race, where she exposes economic inequalities by breaking down data by race and sex. Her work informed former President Biden's executive order on advancing racial equity. Rhonda Vonshay Sharpe joins us now. So, Rhonda, when we look at these job cuts, companies using AI as an excuse to cut jobs, or maybe they are actually replacing some functions with artificial intelligence, who does it affect the most?
So that's a twofold question. I think it's going to impact folks who are coders. If you'll remember, we've had this huge push in getting people to be coders, computer programmers. I think they're going to be impacted, especially at the junior level. We are using AI in my organization to help us do some coding. I think it's what we already know. It's just going to affect new entrants into the job market because AI, I'm going to put in quotations, is cheaper than bringing on a new employer. And then I think it's going to affect some of the older workers who don't have the skill set or willingness to learn AI technology.
Yeah, I
don't think it's a single story. I think it's
I was going to ask about that. But because I wonder what the data shows. In my experience, anecdotally, I see my parents both in their late 70s. My father has absolutely no idea what artificial intelligence is. My mother uses it like oxygen. So are older people left behind, or are they using this technology?
I think they are. I think they are behind, but that's not a surprise to us, right?
No.
I think many of us come to technology as we are required, right? As everything moves towards it and you have no choice. But I also think the important thing to realize is, what are we talking about when we're talking about AI? Many of us have had AI and been using it for years. The spell correct on your phone. AI is powered behind Word documents when we're looking at spell correct. So I think it's important to differentiate what we mean by AI. And in many instances, we're talking about using some of the AI agentics like Claude, my favorite, ChatGPT, Gemini. We are talking about those tools, Magnus and some others, not AI, right? Because many of us have been using that for years and just not unaware that we were using AI.
How about, using these, Claude or ChatGPT specifically? In my experience, in this office, as far as I can tell, women really lead that charge. But I've seen stories that say more broadly, women fear being left behind with this technology.
And that's rightfully so, because if we think about the conversation, it has suggested that women are not in tech space, that women haven't been receiving the degrees in computer science, information science, mathematics. I think I recently looked at some numbers, and those are the areas where, depending on the racial and ethnic demographic, men earn degrees in those fields 2 to 1 pretty much to women. So I'm not surprised that women are concerned, nor am I surprised that women are leaning into using AI, because if we don't have coding skills, many of us may see this as our equalizer.
What about young people? We've heard so much during, it's graduation season, and so many speeches focused on the evils of AI. I saw a Gallup poll that said people ages 14 to 29 feel hopeful. 18%, I should say, just 18% feel hopeful. That's down from 27% in 2025. So a dwindling number of young people are optimistic about this technology.
And I think that's rightfully so. I think we have this assumption that they're not listening to the news, but I suspect that they are hearing the ways in which AI is making the job market tougher for recent graduates. So if you factor that in, and the fact that the younger generation seems to be more environmentally conscious, it doesn't surprise me that they have concerns about AI, both from the standpoint of what it means for their economic security, but also what it means for their independence in terms of being able to get a job.
Rhonda, great to spend some time with you. Thanks so much for joining us. Rhonda Vonshay Sharpe there of the Women's Institute for Science, Equity, and Race. Coming up, more jobs market data on deck in your day ahead. And of course, we get the all-important non-farm payrolls number out tomorrow. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead today. First up, jobless claims coming at 8:30 a.m. Eastern, like they do every single Thursday ever for your entire life. Then a marathon of Fed speak this afternoon from Barkin, Bowman, and Schmidt. Plus, don't miss our interview with San Francisco Fed President Mary Daly. That's at 11:40 a.m. And all eyes on SpaceX. Formal marketing for their record-breaking IPO expected to kick off today. Jamie Dimon himself going to sell shares to high-net-worth investors at J.P. Morgan. In terms of the movers we're watching, Broadcom is one of the big ones, down 12%, although it's added $270 billion in market cap over the past 5 trading sessions. CrowdStrike down more than 10% after not raising its outlook enough. And you can see PVH also losing almost a quarter of its value, the owner of Calvin Klein and Tommy Hilfiger, with a weak outlook. In terms of futures, we're looking at losses. In terms of crude, also down 2% at 95.84. And you can see the 10-year yield losing 2 basis points to 447.29. That does it for Bloomberg Brief. Surveillance is ahead. And of course, my program, Open Interest, today like every weekday from 9 a.m. to 11. This is Bloomberg.